American Express shares are lower this morning. The company reported mixed third quarter results. Actually, if you looked at them for the most part on the top line or on the bottom line, they were pretty strong. They did come in with much better than expected bottom line earnings. The revenue line was a little light. It did raise its full year earnings guidance, though, too. Joining us right now is someone who's about to jump on the Amex call. That's Erika Najarian. She's UBS large cap banks and consumer finance analyst. And Erika, at first blush, when you looked at those numbers, they were pretty impressive. Why do you think the shares are down?
So American Express is not really about the bottom line. The reason American Express trades such a premium is it's really because of spend. And you may have seen that they went to the low end of their revenue guidance for the full year. They were really expecting a rebound in spend to get to the midpoint of that range. And with the valuation where it is, I think that investors are a little bit nervous that the big American shopping spree post-COVID is perhaps continuing to decelerate.
Okay, so in terms of consumer spend, they did say that card fees were up by 18% versus 16% last quarter. So that accelerated. But I guess you're talking about the overall growth, which was up by about 6%. What do you need to hear from the company? What are you going to be digging down on? Just whether consumers are pulling back or not?
Yeah, so underneath the hood, Becky, you actually saw some spend trends decelerate. They love to do it by age cohort. So you saw, Gen Z, millennials, Gen X decelerate their spend by 1%, baby boomers by 2 percentage points. And interestingly, T&E or travel and entertainment spend actually decelerated as well. I think what investors are going to focus on is what does this imply for 2025? I think we've underwritten this concept of a soft landing and continued strength in the consumer. But the spend trends have been stable at Amex. And so, if we think about those leading indicators starting to slow a little bit, does that mean that spend, slows down from the 6 to 7% that we saw this year? And by the way, those card fees or those annual fees, like the $695 per year that you pay in a platinum. So that's going up. And I think American Express has actually hinted that it's pursuing potentially a higher platinum fee in the near future.
Yeah, the way they describe it, at least, is they'll say, we're charging more, but we're building more value into the card. I guess the question becomes, is there a price point where consumers will say, OK, no more, we will not continue to increase those fees? I think to this point, they've seen very strong renewals, even with those. But you're right to point out that the stock is up by about 48% year to date. So there's been a lot that's been built in and given to that in terms of the credit they give for that, too.
Absolutely. And look, if the economy is fine next year, it's no problem for folks perhaps to spend almost $1,000 per year, especially if Amex continues to increase the value that you get for the platinum card and the gold card, let's say, which is a different price point. But if the economy is a little bit softer, and by the way, bank earnings are implying that all of those COVID savings in terms of excess are now sort of closer to 2019 levels, then, there may be folks that say, hey, it's a charge card. I don't have, recurring debt. Maybe I don't need to wake up on January 1st and spend $695 or $1,000 wherever Amex decides to raise it to begin the year. So it really, really depends on whether or not we stick this so-called soft landing.